Well, I think that, this idea of sustainable investing really started in Europe, and there's a strong constituency already in Europe. I think in Asia, it's a market that is just beginning to start to show these shoots of interest.
And when we talk about a degree of skepticism that is still out there, I think one thing that concerns some investors is, okay, we all want to do good.
Yeah.
We want to have portfolios that are good for the environment, good for social projects, but what do returns actually look like?
I think that's one of the things that we're very, very careful about when we're proposing the funds that we look at for the platform, because at the end of the day, we don't want clients to have to compromise returns. And because of that, they have to be, or we have to be, very selective for them about picking the right types of funds.
And how do you go about that, too, when it comes to knowing which funds truly are absolutely green? Because a lot has been written about the fact that someone might slap that name on their fund and say, we are doing good things for the environment, we're staying within standards. But there really is a lack of an international standard here when it comes to just verifying that, isn't there?
That's right. And I think it's good to kind of just go, quickly over the kind of taxonomy of what we're talking about. There's sustainable investments, which is kind of the umbrella term. And people are really, interested in sustainable investments. But then when you kind of go below it, we have the environmental, as well as the social economic type of funds, and then the type of governance funds, okay, the ESGs. These are three very specific areas, and I can talk about all three of these. And as well, you also would have what people would call integrated or SRI investing, where you're just trying to do best-in-class type of investing. I think that's probably the hardest one to do.
And do you normally have them sitting alongside each other, or do people come to you and say, look, I want a very specific ESG portfolio? Yeah,
I think what we want to do when we're developing our platform, first of all, we have at DBS, 250 some funds, and from this we recommend only 40% of these, maybe 100. But we want to develop from our side, a small selection of high conviction ESG funds. So we have a selection in the environmental space, a selection in the social impact space, and we also would have some governance funds as well, where we think that there's a really high level of integration of governance within the funds.
Is it fair to say that when you are investing, let's say specifically in environmentally friendly funds, if you will, that some of these companies are smaller, often targeted at emerging markets because of the climate transitions underway in those markets? Does this raise concerns about volatility, especially in this late stage cycle we're in at the moment?
Yeah, that's absolutely right. And I think that when you think of environmental funds, what you're really talking about a lot of the times are about funds that are focused on industrial production, efficiency in production, efficiency in energy, and so these are, tend to be mid-cap size funds. When you're looking at the impact side, the social impact side, I think you're absolutely right to, touch on the point that these tend to be a little bit more oriented to emerging markets, because there's a lot of social development that can be done in these countries, and they tend to be more related to financial inclusion, education, and these types of focus. So that's why you get these two different strains.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.